Morning, Tony. Well, guess what? I got you covered once it's open. Hey, Mohammed. Distressed, David. Said he's a little stressed about the market. As an investor, it's perfectly normal to be stressed about a market, but as a trader, um, it shouldn't really make a difference. At least that's what you'll find after you really start doing it a while. It doesn't matter which way it goes, as long as it's going to go a direction. Then we're well. Even if it's not, you can sell premium. Just gotta match what the market is giving you to what you're gonna trade. Uh, what's the shirt? Curious. This one? Thank you, Terry. It's just a hey, Todd. Actually, a very nice guy I know bought me this shirt in a roundabout way. Sitting right over there. No email. Okay, that's the second person. Did anyone get an email?
Nobody got an email. Let me let them know, okay?
Yeah. That's how I have to give most of the credit to my parents. Had to use text. Okay. Did I post the YouTube link or did I just squirrel out? There it is again. If you don't have it.
Okay. How many people in the room here?
We've got
Oh yeah, definitely didn't.
124. Yeah, we're
Yeah,
low.
definitely. The email definitely didn't go. Let me just let them know.
It might be hard to borrow, Murmus. Let me look. Ticker AI, Murmus.
What about it?
You said he couldn't short it, but I don't see hard to borrow on here.
No, AI is so big stock. Huh. That's weird, Jim. That's really weird. Strange. Very strange. Hey, Robert. Yeah. Good, Gaston. Good, good, good. Listen, 10% doesn't grow on trees. Went out at Huh. That's weird, Jim. That's really weird. No, my pleasure, Thomas. Talking about emails didn't get my usual. Yeah, they didn't come today for some reason. Good. I'm glad you guys made money on that stock. Good, good, good. Yeah,
That's
sometimes, but AI is a big company. That's not a small company. That's
see, I'm not getting that message on
yeah.
toss.
I didn't get it on mine either. That's weird. I don't know why that would be. Huh. Huh. All right. Weird. Very strange. If you get that, just just buy a put. I know a lot of folks did well on the put. We're talking about a trade that we took in the pit this morning, and I'll be starting in just a few minutes. I'll be starting in exactly 3 minutes. Okay, and the email is going to go out in about a minute. I'm sorry you guys didn't get the email today. I don't know why that happened or why it didn't happen. AI was a stock that we took in the pit. Still holding AI, got in a little late. Yeah, it's Wes. If you know, every trade I put in is can be a swing trade. Officially, we obviously I'm out, but if you can always talk about trades that I'm out. If we're officially out, you could like you guys are talking about now, you can talk about it till the cows come home. I don't mind. I have no problem with that. Susan, how much to short? Same amount as you would go long. It works exactly the same way. When you make a left turn or a right turn, do you reanalyze your pedal and see how if there's a difference? You don't, right? It's the same thing. There's your it should be exactly the same. Oh, I didn't have my water with me. When you go outside, Matt, do me a favor. Fill
Yeah,
this up.
yeah, I'll grab it right now.
Thanks. I forgot about that. Yeah, so don't worry about that. All right. They're going to be sending those emails out pretty sure. Yeah, just buy a put. And let me share my screen and we'll start with the session. Well, it's a true analogy actually, because driving a car is something you do subconsciously, just like you guys got to understand when you do something for 30 years, you don't think about it consciously. You think about it subconsciously. Like I don't think about I am going long right now. I am going short right now. I don't have those thoughts. They don't exist. After you don't think, oh, I'm gonna press the gas pedal right now. Oh, I'm gonna press the brake pedal right now. Oh, in 30 minutes, in 30 seconds, I'm gonna go left. You don't do that, right? You don't. Beginners do that. People who've driven for anywhere more than 6 months don't do that. Well, imagine putting in um, thousands and thousands and thousands of trades. It just doesn't. Yeah, they send the email. They had to force the email. That's why I'm kind of stalling the show for a few minutes for things to get ready. All right. I'm a beginner when it comes to puts. That's okay, Susan. It what I'm trying to explain to you is it's exactly the same thing. There is no difference between going. Thank you. Between going long and going short. There is absolutely no difference whatsoever. There's no difference. You shouldn't make any difference in your mind. All right. It shouldn't be any type of difference in your mind. And I thought today would be really busy today uh, because today's Monday and the market sold off on Friday and I wasn't here, but I guess folks are playing hooky today. Hey Chamberlain, how are you? Hopefully I got your name right. All right. So let's talk about a few things. First of all, let me just show you something on my stock fetcher. I was telling Matt about this right before we came on, and I am sharing my screen right now, right?
You are.
Okay, good. Oops, wrong. So, hey, Brendan, how are you? Good, Bob. Good. All right. I'm not going to focus on that. Thank you, Brendan. So, look at how many stocks are making 20-week highs. Notice something. These are indexes, so they don't even count. You literally have one company making a 20-week high. That's bad. That's bad. Think about it. You've got participants, and you need to have that the buyers versus sellers. This is not good when there's one stock making a 20-week high. Let's go deeper. How about 50-day high, right? 2-month high. Same stocks. This doesn't count. It's a Japanese hedged equity. It does not count. And the stock's directional 3 times bear definitely does not count. Schwab, the only company. How about stocks making 90-day highs? First, my 90-day high. 90-day highs. 17. Well, let's take a look at these. This doesn't count. This is silver. Okay, I guess that counts. That doesn't count. 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 That definitely doesn't count. And that doesn't count. So you've got 1, 2, 3, 4, 5, 6. Yeah, Thomas. Anytime I put on anything in the pit, it typically continues moving that way for a while longer, especially with the downside we're seeing now. Yes. Yes. All right, let's continue. So my point in saying this is not to scare you, but my point in saying this is that the markets are not as bullish as some of you may want them to be right now. Okay? Just kind of throwing that out there. Also, what I wanted to show you is that if you look to the short side of the market, look at how many stocks are making 20-week lows. 132. 132. So you literally have, very, very few stocks really making moves. And as I mentioned before, it's not just little stocks. It's stocks like Roku. It's stocks like Philip Morris. It's stocks like Zoom. It's stock AMT. And we'll get into all of this today. So my point is the market is not looking that great, and it's not representing to look that great. And also, as I mentioned a few sessions ago, you've got Tesla breaking back down. Remember we talked about Tesla, lower highs, breaking down. I warned you about this. The fact that, oops, that Apple stock can't go higher, the fact that volatility is still above the 50-day moving average on a daily. None of these things are good. Most importantly, this morning, look at the bond market. Bond market on a 5-minute look, it gapped down. What did it do? It's near the lows right now. That's a breakdown. That kid, every time the bond market goes down, that kid is starting to say, I'm probably not going to get my bike. I'm probably not going to get that bike. He now thinks the odds of him getting that bike in the summer are not. He's writing that he's got the skateboard planned out. He bought himself a season pass to the skateboard rink for the summer, but he still thinks he's going to get it before the end of the year, which is why I thought we would stay here a lot longer before breaking down. But I guess I was wrong. I guess it came down to it faster. But when you see this and you see a big breakdowns on stocks, big stocks, it's not good. And what did I say this morning to you guys? What did I say this morning? I said, the market's up. Don't fall for the banana in the tailpipe. Give it a first hour. Well, what did the market do the first hour? Gapped up, and it completely erased the entire gap right here and went to Friday's session. And now the NASDAQ, which was up over 100 points, is up only 35 points. And the Dow, which was up 300 points or 200 something points, is up only 164 points. That's not good. That's not good. So we have to be extra careful. We can now trade to the short side. I could now trade to the short side, which I really love to do in the pit. I prefer trading to the short side, so it's perfect for me. But even the bounces that we've seen today, we're not above the VWAP. The move to the VWAP has been very iffy-washy. Stocks are not just, I'm not seeing anything great. Hey, John, how are you? I'm not seeing anything exciting. I'm not seeing anything great. We're sitting at the 50-day moving average on the SPY. On the Dow, we're below the 50-day moving average. So this is not good either. And odds are here, what we'll do is we'll come up right here and then come, like we did with Tesla, come up right here and then come right back down. But anyhow, or maybe even not get there. But my point is, I'm not loving what I'm seeing right now at all. And remember something. We've got earnings coming up on big FANG stocks, and if they can't get it up during earnings, then what is left? What is left? 1 second, I'm looking at something. Okay, sorry, again, need to take a little note. Oh, thank you, Carlos. I appreciate it. And hopefully you made money on that AI stock, or making money on the AI stock. I appreciate it, Carlos. Thank you. So be careful, guys. We're at the 50-day moving average, and I'm not seeing any reason for why we need to get off of it right now. And also remember, today's Monday. Monday is typically a probing day. It's a recalibration day. It's a kind of a day to kick the tires. And historically, it's the worst day of the week. It is, Richard. Yeah, yeah. So I'm not really, I don't have a real strong reason for you guys to go buying stocks right now. I don't. I don't see one. Things are definitely softening up. For now, it is on the QQQs. For now, it is. But you see, every time we rally, we try to rally off of it, and then we bounce back down like we're doing right now. It emboldens the bears. And I always tell people, have you ever seen an emboldened bear? It's not a pretty sight. Neither, neither. RV Hannings, I just got done explaining how I'm not really bullish on stocks right now. Oh, the AI trade is a trade that we closed in the pit, but some people wanted to keep staying with it because my pit trades usually are really good swing trades. So, but officially that trade is closed. Finito. In at 21.45, out at 21.22 or something like that. Yeah, you got to join the pit for that, Mohammed. All right, all right. So, not really happy with the market, not liking what I'm seeing. Let's look at one more thing real quick. One last thing. And I wanted to quickly look at this during the session right now. Get the short term. Let's see how correlated they are. This is good. This is good. This is good. If we can get this consumer staples out of here, we're golden on the tech. Then you got S&P 500. That makes sense because tech is leading. So you got Nasdaq over here, tech, S&P right here. Then you got energy, industrial, healthcare, consumer discretionary belongs up here. If you can take consumer staples and put it right here, and take consumer discretionary and make it up here, you got mid caps next to the Russell. You got real estate next to home builders. This is on its own. It doesn't look that bad. Honestly, I would like to reverse consumer staples with consumer discretionary, and then the world can be at peace. But the more we go down, the more these will start looking aligned to each other. And the more they start looking aligned from each other, the more balanced the market will get. And the more balanced the market will get, the more rhythmic it will get. And the more rhythmic it will get, the more it'll start trading normally. Hopefully that all made sense. Sometimes I use the wave example. Sometimes I use the kit example, but you guys follow along well. But this looks a hell of a lot better than it looked a week ago. A week ago, it was like semiconductors, materials, consumer staples. It was like all over the place. Now it's not. Yes, for VIP members, everybody has to pay for the pit. Yeah. The question should be, do pit members pay for the VIP room? That'll be a question that will be coming up, Rochelle, in the next 3 months. Because now that I'm doing the morning live feed, I don't think I'm going to be doing the VIP room for free much longer. So you will have to sign up to one of my programs. Now, if you sign up to one of my programs, you'll still be able to get into the VIP room, but you'll have to sign up to one of my programs. So this is starting to look a hell of a lot better. I mean, look at this. You got utilities, materials, financial. You got all the Dow. You got Dow Jones right here. You got retail. That's not bad. Again, if I can just reverse consumer staples and consumer discretionary, I would be okay. Gaston says, when sectors are aligned, is it a bullish signal or just that an actual trend will continue? When sectors are aligned, it means markets are balanced. When markets are balanced, they begin trending. Markets go from being trending to non-trending, trending to non-trending. Yeah, it shouldn't be an issue for you, Rasha. I'm not really talking to you. I'm just using your question as a jump off. Okay. All right. So, there you go, Krish. You got it. So what about number of stocks making highs? We're not there yet. We're right now in a pretty good equilibrium market. I don't really care that there's 9 stocks making highs and 150 making lows. Till there's 450 making lows, it's still going to be a two-sided market, which is so good for us because now we could trade. See, if I didn't have the short side, I wouldn't be able to put on a trade in the pit today. But I have so many shorts right now that I could. There's so many opportunities right now. I can't wait to get out of here and put on some more, actually. And I like trading to the short side. All right, so let me give you guys some stocks to the long side and to the short side. Be careful right now. Be careful. It's a two-sided market. Don't think if you make a mistake, the bullish cycle will just rescue you like it's been doing for the last 6 months. We're not in that market cycle right now. We can come back there, but we're not in that market cycle. As far as Fed data this week, just real quickly before we move on to our picks. By the way, remember I told you I would issue a trade in gap to green right earlier today? Did I keep my word? I issued a trade, and I even gave you guys a debit spread. And please don't mention it here to make it easier on you. All right, so big news reports this week. I don't think Fed data is going to be the biggest thing. I think earnings right now is the main focus. We got jobless claims, which is not even, I don't even talk about this report. I talk about employment data, but not jobless claims because it's been between 200 and 220 for the last 3 years. We got existing home sales, home builders. You definitely want to stay. Jules says, did you put your trade on Telegram? Jules, which trade? Can you be more specific? So we got existing home sales. We got where's new home sales? Housing starts. Tomorrow housing starts. And don't we have new home sales too? Yeah, of course I did right here. Look, new gap to green posted in members area. Get it while it's hot at 11:31. 50 minutes ago, Jules. Right here. Of course I do. Why wouldn't I do that? That would be kind of mean. Yeah, about an hour ago. 50 minutes to be exact. So, is there new home sales this week? Where's the new home sales? We got housing starts, which is big, and we got existing home sales. I don't see new home sales. I must be missing something. Anyway, why is it important? Interest rates. A lot of folks right now are on the sidelines. Home builders have to be very, very calculating right now because they listen to the Fed. It would be very useful if Pulte Homes listened to Uncle Roger instead of the Fed because I have a better pulse on what the Fed's going to do than the Fed themselves, at least for the last several months, as most of you know, with the analogy with the kid via the bike. But the home builders are in a pickle because they were promised lower rates, so they started going ape earlier this year, and prices ballooned up. Are home builders going to continue that? Are interest rates going to go down as fast as they think? I mean, look at retail sales today; they were fantastic. You don't need when you have strong employment and you have when you have really good retail sales data. There's absolutely zero reason for the Fed to lower rates. Zero, zero, zero. So, anyway, be careful. Be careful with these home builders because if home builders start coming out with news like we're pushing back, and that whole sector is very, very. It's like semiconductors; they feed off of each other. KB Homes, Pulte Homes, all these home builders. Be careful. Be careful. So far, remember, the kid still thinks he's getting that bike at the end of the year. If that's the case, no problem. Ignore everything I'm saying. Susan said, I made a mistake and did a sell to open. And Schwab said, I'm not authorized. Should I take the chance of doing the first part? Susan, I have no idea what you're talking about. Maybe you could send me an email because your mistake doesn't involve the 300 people here today. Just send me an email so I could privately explain to you what the problem is, or go to customer service live, or better yet, contact Schwab. There's a reason why you pay them good money. All right. Yeah, let me take a look. Yep, look at the Nasdaq. You see what I mean? I'm. Do you see me getting really bullish around here? No. You could still buy a put if you're level one. You can buy a put. You know, if you don't want to do a spread or you're not approved for level two, then just buy the put. You don't have to do the both sides. Just buy the put and that's it. Just the offset just makes it easier for you financially. That's all. Yeah, SPY's coming down. And remember that stock I told you guys about that we made money on? What is it doing? It's coming down. There we go. Back to where we got out. Okay. Why? Because stocks tend to revert, which is what the stock is doing. It's reverting. Oh, there we go. We just took out the low with a big juicy candle. Look at this. I hate to say I told you so, but someone this morning told you so. Now think about this. Anybody who bought here this morning, there's a lesson here. Why, Roger, why don't you ever buy the first hour of the day? Why don't you ever take action the first hour of the day? Well, let's say we did. We would be down right now. Now, maybe we wouldn't be down forever. This will probably bounce and it'll probably come back up. We're near the 50-day moving average and all that. And this is just probably a bunch of nonsense. But do you see the problem? This isn't pretty. We just went through and covered the whole thing, and anybody who's long would have been a sucker sitting duck right now. Shorts would have made money like bandits. Jules, I don't know specifically what you're talking about. You got to be specific with me. You could privately send me an email, Broke the 5. Oh, yeah, I remember I told you if we break 511, the market's going to go short. And this thing broke down right when the stock did 511. Funny enough. Thanks for bringing that up. I totally forgot about that. It did exactly as we said. Anyway, let's continue. Let's not dwell. Folks, if you haven't gotten into the pit yet, we're sitting at a 95.4, 95%, 95.5% win rate. Just FYI. All right. My wife says hello to everybody, by the way. She says hi. Oh, yeah. Google's going to get hit hard. If the QQQ is getting hit hard, Google's going to get hit hard. Yeah, there we go. Okay, so let's talk about stocks. So what do you do if you're looking to get short right now? Let me give you a little play-by-play. I'm going to give you my hit list. I'm going to share the what. But right now, I'm going to answer the question. Good, Michael. I'm so happy to hear that. That's very, very, I'm going to hear that.
Got it.
Oh, thank you, Matt. Thank you. What is the trick? There's no tricks, Arturo. You know what the trick is, Arturo? Join the pit or listen to everything I say carefully and write it all down. So, look, here's the marching orders you guys got. So, we're breaking down right now. If we break down here, right here, we're going to probably come down here. We're midday right now. We're in lunch hour. Arturo, pay attention to what I say. I talk about shorts every day the same way as I do about longs. So what I would be looking for is a pullback to the VWAP right now, back up here. And then I would start shorting the weakest stocks when the SPY comes right up here. Okay? Yes, listening carefully is definitely the key. Okay? So I just told you what I would do. And I would think about going long if we broke above the VWAP. We're breaking down. We're not breaking up right now. So that's no soup. So right now, we're traversing down. Oh. Again, you just reminded me I reminded myself of something. You see, guys, every morning I have a game plan that I show you. Let's go through my levels. I got plenty of time. I'm not in a rush anywhere today. So let's go through the SPY. I literally explain it every single day. Every single day. Okay, remember let me just get this clean. So, I warned you this morning that we may be in the doghouse. We broke this level on Friday. This is the low from a month ago. We came on Friday with it. Pays to listen to Uncle Roger in the morning. On Friday, we came within 2 ticks, an eighth of a point of hitting this level. This morning we bounced here. I said, no. We're not up here. The odds are if we can't get up here, we're just going to come back down. And we did. So if you were there, you would have had that game plan this morning. But here's the caveat. Let's forest from the trees. Are we really breaking down right now? No. We have to go below this level to break down. So we're still in a very, very chop shop here with the SPY. Now, what about the QQQ? If you guys can't figure out how to react based on how I'm teaching you guys, then you should join one of my programs and just start following me for now, and then you will start there. But I teach like a movie. I continue where we left off every day. That's why I'm thinking I wasn't here on Friday Did you guys feel a little lost, a little out of balance, a little not knowing whether we're going long or short? That's the impact that I have on you guys. So you see how choppy we are? So look, focus in, if I focus in, you don't know what the hell's going on. But if we step out and go back 3 months back, this is what I say before you go to the bar and get drunk and ask somebody to marry you. Uh, find out if they're a woman or a man. Find out their name. Find out if they're religious. Find out if they're not. Find out if they like Trump or Biden. You know, get to know them. And this is how we step out. We get to know them. Oh, there you go, Carlos. Oh, Rado. I don't go anywhere that often. So you see, we're still choppy on the QQQ, but let's zoom in. This is a 60-minute chart. We went to this level and then we broke right back down. And to me, it looks like we want to come right back down here, which would put us at this level right here. So I think there's more downside to go because we've already been below this level just in the last few weeks, once, twice, 3 times, 4 times. So I don't really see anything that would stop us from coming down to this level here. Thank you. Somebody actually missed me. Look at that. And by the way, that stock, write something to the pit real quick. 1 second. Here. All right. So if you missed getting spelling, let me edit the spelling. One second. Spelling. There we go. All right. Oh, thank you, Jules. So yeah, if anybody didn't get theirs, you can get there now. If you guys didn't get out of AI earlier, it's below 5 cents below my exit. So no excuse now. Should be up a good percentage on that trade. And if you made money on it, post it here. Well, let's take a look. That's a great question, Paul. Let's see. Remember, we're still choppy in both SPY and QQQ. It's the Dow that I'm having let's see, 508. I don't know. I don't know. I'd like to see how we are near this level. Right now, we're still kind of getting towards it. Probably. I don't know. Hey, 10% is better than a sharp stick in the eye. You grabbed that, Matt. That's really good. I like that. That's a good one. All right. Let's continue this exercise. So, see, still choppy, but look at the Dow. Very excited today. I'm very well rested. Good stuff. Look at the SPY. SPY's not looking nearly. SPY already. I mean, the Dow already broke down. And the question is, are we going to break down this level here and go down to 37,200, or is the rest going to pull this up? But blue chips are not looking great right now. Now, again, I couldn't give a rat's you know what if we're going up or down. Matter of fact, I much prefer downside moves because I can make better money on them faster. Jules, if you send me an email, why don't you go to Customer Service Live and ask Cam, and he'll show you live. Basically, you're selling before you're buying. You're doing your buy. You know how you buy and sell? Here you're selling and then you buy. That's all you're doing. Yeah. So yeah, you shouldn't be in Disney and Ball right now. That's not. You shouldn't be long any stock right now. All right. So now, with all that said, I gave you my entries. I told you the levels. I've explained everything. Let's now go through stocks. Let's now go through our stocks. This is the 5-minute Hakanashi. This is the daily Hakanashi. This is the regular price. Let's do it. Mandelas. These are all stocks that I like for swing trading shorts, okay? Below the 200-day moving average. Market was still going higher. What did this stock do? Nothing good. 15-day EMA would be my stop. We're looking at 18 days out. We're looking at puts. We're doing puts, guys. We're doing puts, okay? We're going 18 days out, and we're going to the 76 delta right here, and we're buying the 67 put. So somebody asked me, how do you take advantage of the short side? You can buy a put. If the market goes down, if the stock goes down, this will go up in price, okay? Sorry, I didn't make money on the but shorted the SPY at the daily 8 and due to your comments this morning that didn't look good when we didn't go up further in the first 30 minutes. Okay, and you probably made money, right, Frank? As long as you made money, Frank, that's all I care about. Okay, so that's that. Let's continue. Oh, I like this one a lot. I like this one a lot, and I like how it's breaking down. I prefer to break down a little bit more before we get in, just a little bit more, but I'm okay with it. Thank you, Jules. Right here, 27.27 would be a good place to put your buy stop, because if it goes above this level, you really don't want it. It should be making lower highs like this. See lower highs? Love stocks that look like this. Love stock. Engrave this pattern into your brain. Every time I say that, Matt, it goes against me. You know that? Ironically. 27.20-ish, something like that. 18 days out, we're going to the 70 delta. We're going to the 26 put right here. Good. Hey, grab that from Frank. Look at that, up almost 100%. Good. Well, Frank, you would have been up pretty good if you took the AI trade too. And you could, and by the way, look at it intraday. Look at intraday. Breaks down, right? Hits the VWAP and then comes right back down. Love those VWAP hitting trades. Love those VWAP hitting trades. Next one. This is a very interesting one. Why is this an interesting one? I'll tell you why. I should have actually, it should have come up to my attention sooner, but it didn't. But this is very interesting, and I'll tell you why. You notice how chips have been, look at semiconductors. Semiconductors are really strong. Matter of fact, they're holding up way better than anything else. Look at that. They're not even at the 50-day moving average. But this is a semiconductor stock. And you know, it's ironic. I was saying to myself, I wish I could find a weak semiconductor stock. I wish I could find a weak semiconductor stock. Well, this sucker never went above the 200-day moving average on the daily. It went above the VWAP today on the 5-minute and then came right back. It's at the VWAP right now. There could be some good opportunities to take it from here all the way down to here if you're an intraday trader. But the stock is weak. Now, one of the things you want to look at, remember, I always tell you guys something. When you're looking at stocks, try to find, if you're, okay, let me do it backwards. Let's say the market's making new highs, okay? Gaston, ask me that question in about 10 minutes, 15 minutes. Let's say markets are making swing highs. And let's say that you're in the number one sector and there's 30 stocks in that sector and all stocks are making highs. Do you have any idea really if a stock is strong or not? No. Which means if you're opening yourself up to vulnerabilities. But Roger, they're all going up. It doesn't matter. Yes, it's fine. And if the market continues going up, you'll be fine. But if it doesn't, uh-oh, you're going to be screwed. You're going to be a sitting duck. What do we always try to avoid? Being a sitting duck. Well, here's a stock that's completely saying, all of you guys left me. You guys, it's like this is like the Tesla for the FANG stocks. You guys all have left me behind. So we know that this stock is weak, even if the market, let's say the market says right now, we're going to turn everybody around and screw everybody over and break a high. This stock probably won't do that. Why? Because this entire time, while the stock market's making new highs, the stock is sitting below the 200-day moving average. I only wish it came on my radar earlier. But here we are. I like the stock. I like the stock. I always like stocks that are bucking the trend. Like this stock, like bucking the trend, clearly bucking the trend. Stop loss right here, right above these two pivots, about 72.70-ish level. We would go 18 days to the put. We would go to the 74 delta, which would put us squarely at the 70 put. Notice I'm not even looking at the strike price. I'm just looking at the delta, and then I'm going across. I want a delta over 70. That's all I want. So you wouldn't buy a call. No, I would buy a put. I wouldn't buy a call on a stock that's breaking down when all the other semiconductor stocks are going up. No, I would definitely not buy a. This is puts. We're looking at puts. We're looking at everything we're looking right now is puts. Next one. And by the way, I try to give you different stocks from, I try, not always, but I can succeed, but I try to give you different stocks than I find in the morning. Okay. I do try to do that. Oh, sorry. I had the SPY up. Yeah, we're definitely breaking down. Not surprising. Not surprising at all. That AI made a lower low at 2116, if anybody's interested. All right. Upstart. What has the stock been doing? Nothing. It's this entire for the entire year, pretty much. Just go with me on this one. It's been since February. It's been below the 200-day moving average. Today, what is it doing? It's going straight down. Going straight down. But you could see it has some movement, which means it's sensitive to the SPY, which means you would probably want to see a pullback on the SPY before getting in. Offensive what, Buck? What did I say? I have no idea what I said that would be offensive, but I don't know what I said that was offensive. Can someone remind me what it is that I said that was offensive? I don't know. Anyway, let's continue. All right.
I get it.
What did I say?
It's a joke. You said bucking the trend. His name is Buck.
Oh, now I get. Yes. Okay, that was a good one. That was a good one. That's funny. That's funny. That's funny. That is funny. Not so fast, Brendan. I consider SEDG not a semiconductor stock. I consider it a solar stock. I know it. No, it's categorized as a semiconductor stock. Matt and I had it out on this one too. It's really a solar stock. Anyway, let's continue. So the stock is looking good. We would put a stop at the 50-day moving average. If it breaks the 50-day, we really wouldn't want it. And on an intraday, I would really want to see if it takes the VWAP or maybe comes up to this base. You don't need to go all the way to the lows because look, it does react. Sometimes they break down and they just sit there on the lows. But if they don't do that, give it a chance to give you a little rhythm, a little rhythmic. Now, again, the good thing about going with the trend is if you're right on the trend, you'll be saved. Like on AI, whether you were early or not, the trend just continues moving in our way, but you got to go with the trend to do that. And these are all within trends. We would go 18 days out. We would go 70 delta. We would go 2450 put. Nice. I like this one. I like the put on this one. I like this trade. KSS. Again, a lot of retailers, a lot of big named companies. Remember for a long time, for about 2.5 months, 3 months, there was just hardly any shorts. I mean, there was nothing for me to take to the short side. We're now in a different environment. And Snap, the stock Snap is breaking down right now as we speak. Anyway, KSS, this gap right here would be our stop. About 2450-ish. We would look at 18 days out. We were looking at a delta of 70. We would go to the 24 put. I'm not that familiar with that company off the top of my head, Brendan. I'm just not as familiar. But I've been looking. I've been actively looking. I've been saying to myself, what's that one chip stock and what's that one energy? When everything goes up, you want to find that one loser. Like FANG stocks, Tesla's that one loser. You want to find that one loser. Okay. Yes, too many stocks looking good right now to the short side. I feel like a kid in Disneyland right now. All right, so I gave you this one. Let's move on. Bud, breaking the 200-day moving average, folks. Look, lower highs. See that? Lower highs. I'm a big fan of lower highs. We talked about that this morning, Thomas, remember? Don't Monday roll turning around day, not a lot of highs. Be careful. Look at these levels. Don't expect it to break through. Be careful, be careful, be careful. Don't fall for this rally. Remember that? Hopefully, I saved you guys some heartaches this morning. Good, good. Glad to hear that. Please keep me posted on how that Cybertruck is doing. I'm very curious about it, Paul. And don't take what I say on Tesla. Take it. It's not personal. So this stock looks very weak here, Bud. I would put the 200-day moving average as my stop loss, right around the mid 59s. I would go 18 days out, and I would go to the 83 delta. Oh, no, 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 no. This way spready. Right here, 65 delta. 59 put, 18 days out. Okay, good. Good, Paul. All right. This is a real estate. This is a REIT. Low breaks down, doesn't defend much of it, doesn't recover more than 50%, tries to rally, doesn't go anywhere. More breakdowns below this level. This is looking fantastic. Yeah, it just did exactly as we said, went right to the low. Again, no miracles, just simple analysis looking at the market from a perspective of an institutional trader. Nothing more than that. Tesla's looking like a good short right now too, by the way. I got to stop giving them these Tesla things. I think somebody has in our ecosystem has a service with Tesla. Lance, I think. So I better stop giving you these Tesla tidbits. You got Lance for that. All right. So bearish here, stop loss right here, about 57.40. Oh, right here, 72 delta, 55. Oh, no, 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 no. We're going, no, not 4 days out, 32 days out. And we're going to look right here, this 94.60 put right there. My wife says it looks very futuristic. I haven't seen it yet. Sometimes I am clear, but in this case, volume is fine. There's volume coming down. My wife saw it when she was in LA a few weeks back or a month ago. She said she thought it was very futuristic looking. But I'm not a fan of their. I've never been a fan of their. I was a fan when they first came out for like a week. I kind of liked it, and then I was like, eh. And then Booker let me drive his car, and I was like, nah, don't like it. Four. Oh, this looks so good. Look at this, Matt. Doesn't that look fantastic? Look at that. That looks good. Really, really looks good. I love looking at charts, Again, lower highs, trailing the 15-day right here. 70.39 would be your buy stop. Breakdown right here. May 32 days out, May 17th. There isn't anything in between. 75 put, 70 put right here. 75 delta, 70 put. Good, Kathy. Yeah, I'm just not seeing it with Tesla. But you know what? A lot of people love that company. A lot of people love that company. Kind of like Apple, has a fan base. All right, TJX. This is called 10 time Geno. It's a biotech. Biotechs don't usually do well when markets sell off, just FYI. Also, look, 3 lower highs. I love the lower highs. You know that, Matt? I love those lower highs. Lower highs leading to a breakdown. Your stop would be right here above the last swing high, about 38.12. Try 911 Turbo, Tim. It's a little more exhilarating. You would be looking at 32 days to go, 93 delta. No, 93 is too wide. Go with the 64 delta. 35 put. Next one, You might have seen me recommend this one before. It's the same thing. Hummer, huh? I didn't know Hummer's back. All right. Stop loss would be right here about 63. This is Jack. We're looking at 32 days out. We're looking at 84 delta, 65 put. I have one more. WH, Wyndham Hotels, breaking down, broke down, consolidated below the 200-day moving average, digested its dinner, and then breaking down again. There's better stocks, in my opinion, on my list than this one. But if this one breaks below 70, there's a good chance it's going to be really good. But I think this one can kind of come up and then come down. But it doesn't look bad, especially if you're looking at hospitality companies. Strike on you. I'll come back to it in a second, Michael. Stop loss would be the right here between the 200 and the 15 days, somewhere like right here, 74.70. We would go 32 days out. We would go 85 delta. No soup on this. No spreads are bad. Okay, Unity, you would go 18 days out, Michael, to May 3rd, and you would go to 71 delta, which is the 26 put. Now, my short side is very short. Yes, what R.V. Hannings just said. My short side is very, very short. Schwab, it's holding up to the bull side really good. If if the market if the market was to go above the VWAP, and if the market was stay above the VWAP and start breaking up, that would be my number one choice. Yes, I would go long Schwab. I would put my stop right below this pivot right here at about 69.30. I still think it's a good stock, but it's in the range right now. I'd like to see it above the range, but it is holding on really well. Let's switch over to calls, shall we? We would be looking at 18 days out, May 3rd. We would look at a 77 delta, and we would look at a 70 call. That's one. Let's look at another one. I know this is a shock. You've never heard me talk about this stock before, right? How many times did I tell you about this stock? It's actually an ETF, but your stop would be right here, about 24.50, 32 days out. Did anybody take me up on it? Last 3 weeks. I talk about it all the time. I've talked about it several times. Oh, all right. See, Matt, nobody wants to tell me how much they're up or down on it. Nobody wants to share with Uncle Roger. I always share. How come you guys don't share? Tell me if you're making money or not on it. Oh, now they come. Now with the Vivek 25%. Let me know if you're doing on this, but I like this one. 32 days out, 78 delta right here, 25 call. Next one, VLTO, making a swing highs and staying above the VWAP. I like this stock. I like this stock. 32 days to go, 87 delta, 85 call. VLTO, if you're bullish. BMRN, it's looking pretty good here. It's above the 200-day moving average. It's been going up several days straight. The 200 would be used as a stop loss around the 89 level. Good, good, good. And we would be looking 32 days out on this to the 78 delta, 90 call. That is all I have for you guys. Oh, no, I have one more. This one right here, CENX, aluminum company. I still like metals. I still like metals. Speaking of metals, let me just check something really quick. Just sitting there again, the stock. I think it's going to start coming back up if metals come in. We're out of it, but I just wanted to check it. Yeah, so CNX, 32 days out, May 17th, 79 delta, 16 calls. If the market was to turn around and go gung-ho, these stocks will probably do. They are looking for a reason to go up. All right. Matt, why don't you do seasonality and take us from there, all right?
Yep. Okay. Here is seasonality to the long side for your sectors. Um, Looks pretty good for most of them. Utilities are very strong. Consumer discretionary is strong. Consumer staples look really good. Energy looks great. The number is 250 today. I already looked. It's actually 252, but around 250. So about half of the S&P, and the short side number is about 60, I believe. 84. Yeah, so we're definitely leaning long in the very short term. On the 10-day hold or your sectors, industrials is definitely the strongest. Financials don't look too bad. Energy looks really good. That's probably the second best. Basic materials don't look bad either. And then up top, um, kind of these guys right here. Oops. There we go. Real estate, industrials, healthcare, consumer discretionary, consumer staples, tech. They're all just kind of hanging out in the middle. Not super long, not super short, just kind of cruising. So not a lot of seasonality there at the moment. On the long side, LRCX looks really good. The chart doesn't look bad either on the daily, but it is almost $1,000 per share. So it's usually out of most people's budget, at least what they're comfortable buying options on. That's why SYY looks like junk. Throw that out. So does FICO. AXP doesn't look too bad. Definitely has sold off a little bit. Gapped up today, sold back down, but it does seem to have good support where it's at. That's kind of the same story we're seeing with a lot of these. Started out strong, then started to sell off just like the market. Not a ton of opportunities there. I do like XLE right now. Let's jump over to the short side just so you can see it. It's very thin. So honestly, it's very mixed too, sector wise. I see a lot of consumer discretionary. That's consumer cyclical in tech. So that would kind of line up together. Other than that, not a lot. And let's jump over to 10-day hold. Slight bullish uh, favoring on the 10-day hold. Not a ton. Very broad sector wise. Nothing sticking out super well. Don't like most of these, to be honest with you. No. I really don't see much that I like right now. No. Maybe I did TV, but not as a long. Maybe as a short. Definitely not a long. Anastasia, what was your? I do not know. Oh, and I'll grab that from Mark. Cool. Yeah, I did say XLE. I like XLE. other than that, that's all I got. There's no more questions, then I'm gonna hop off and I'll see everyone tomorrow.
Be careful here, folks. Be careful going long. There's a lot of large institutional traders taking a lot of short positions right now. Be careful. Be